Hello, and this is going to be a video about the power of a stop loss. Every trader needs to use one. Every trader makes the mistake of not doing it from time to time, and I'm going to show you exactly why it needs to be a part of every single trade that we make. This short video is brought to you by investmenttraders.net. You can always follow me at Stockversity on Twitter and StockTwits. Let's get started. What most new traders fail to realize is that losing trades need to be managed in far more detail than winning ones. The reason that I say that is because if you lose money, it is harder to make that money back than it was to lose it. Here is a very simple equation. If you start a trade with $5,000 or $500, whatever your portfolio size is, it doesn't matter, the math does not change. You start with $5,000, you lose 10%. That leaves you with $4,500 of the $5,000 you started with. Good. Give yourself a star. Most new traders think that if they make another trade and they just win 10% back, they're going to be back to even. But it's just not the case. If you had $5,000 and you lost 10%, you have $4,500. If you now start a trade with $4,500 and you make 10%, that will only give you $4,950. Do the math. It is not the $5,000 you started with, and this also does not include any trade fees or commissions that you have to pay to your broker. We're going to take a look at a quick example here, and I'm going to be using the stock Twitter. Everybody knows it. Very, very well-known company. Trades on the big board stock exchanges, and let's take a look at what happened over here. This is all in 2015. We're going to start off. The stock is trading around $40, $42. Keeps going. Your money is sitting in there. You're doing very well. It jumps up. We're now in the high 40s. You've made a bunch of money. You think you're doing extremely well. Gets even higher into the 50s. Wow, mid 50s. This is just killing it. You're making a ton of money. Who needs a stop loss now? Dun dun dun. What happened there? You went from trading at $52 a share to $38 a share. As fast as that. If you had a stop loss, even below the previous day's candle, let's just say right around this area here, you could have walked away getting out of the stock at $50, not down here at 38, or perhaps even lower than that if you do not pay close attention to your portfolio and what happens to it each and every day. This is a daily chart, but this can happen just as easily in intraday trading. Very, very important why you need to use a stop loss, the power of a stop loss, and what it'll do to save you money as a trader, regardless whether you're an intraday trader, a swing trader, a long-term investment trader. It makes no difference. The power of a stop loss works the same way for all of us. Some of the most common types of stops used are limit orders, market orders, even trail stops. Read up about them. Learn them. They can be your best friend as a trader. To conclude, the stop loss order is a very simple tool. Many of us fail to use it. whether it's preventing excessive losses or you're locking in profits that you have already made. Whatever your reason, nearly all investing styles can benefit from this trade. Think of it as your insurance policy. Hope you never have to use it, but it's good to know that the protection is there if you need it. Guys, think stop loss. Thanks for watching.